Ladies and gentlemen, welcome to the Motivate Property Podcast. Today is the 12th of March 2026. I hope everyone out there is having a fantastic week. So guys, this week we are breaking down the current housing crisis here in Australia. All right, now when I say current housing crisis, that's what the news would have you believe. As an investor, we're going through a boom, and obviously right now is some very good times if you're an investor because your prices are growing leaps and bounds, probably higher than what you're probably planning. However, as someone with a heart and conscience, there is writing on the wall that we're very much in a housing crisis, right? And obviously the problems are only going to get worse if it's not dealt with, right? So really today, we're going to be breaking this down sort of one by one. Now, firstly, obviously this is incredibly important because not only is Australian property, residential property, shelter for human beings. I mean, we need three things to survive: food, water, and shelter. Australian residential property is that shelter, right? So when you're investing in property, you're obviously investing in something that's got a fundamental human need. However, if we're not paying attention to the supply and demand or really the push and pull mechanics, this can get out of hand very, very quickly. And that's the current trajectory that we're on today, right? Now, for those who own property or have been investing, if you're a current investor, like I said, right now times are great, right? Because you're making lots and lots of money, probably making more money than you were really planning on for 2025, 2026. However, if this trend continues, this is not really a good thing for society as a whole, right? Now, when we look at much older and more mature cities and we see the fact that majority of people in those cities do rent because they can't afford housing prices, housing affordability is way out of whack. We do head towards a society where majority of people end up renting and they actually don't ever end up owning any land or any assets. And so the gap between the wealthy and the poor get bigger and bigger and bigger. The wealthy just own everything. The poor are just renting everything. And like I said, guys, I personally don't believe that's a great future for us to be walking into, which is why I think it's important for us to address this, right? Now, having said that, I'm also one man. I can sit here on a microphone and yell about this all day long. Doesn't actually change anything, right? So obviously we've got to make sure that this kind of message does get out there and it gets to the right people who actually have the ability to go and make these positive changes. So let's get stuck into it. So firstly, like I said, guys, there is some narrative out there that we're in an absolute housing crisis. There is narrative that we're in a boom. The reality is it just depends on what side of the fence you're sitting on. But fundamentally, right now, our current housing supply and demand is well and truly out of whack, right? Well and truly, right? Now, when it comes to the supply of housing, and the way I like to describe this, and this is for the newer listeners, older listeners would have heard this quite a few times, but think of the market being on a seesaw, right? So on one side you've got supply, one side you've got demand. Right now, we are way out of whack, right? So we are really, really, really undersupplied of housing. And we have a well and truly over demand of the real estate, right? So that's essentially the current state of the market. Now, when the government makes a lot of these decisions, and when the RBA is trying to increase rates or they're making an interest rate decision, you got to understand that most of these politicians, like they have very limited information based on the decisions that they're making. But from my view, and again, this is from a grassroots level. It seems like they're making these decisions assuming that we're in a balanced market. We're not in a balanced market at all. We are in a critical short supply of housing. So one thing we've got to be mindful of, a lot of the things that the government's doing as a reaction to this, to me, doesn't make sense because they're kind of responding as if the market's nice and healthy and balanced, and it's just not. So this is actually one of the things that's actually causing more problem. Now, what I've essentially done in preparation for today's show is I've really broken down, in my view, the 6 main reasons as to why we're in this current problem. Now, reason number one, and I'll break down these sort of one by one and kind of go through them, right? But reason number one, fundamentally, is a function of poor government decisions, right? So that's the first reason. Now, the reason why I put this as number one, for those who've been listening to this show for quite some time, you may have the view that I don't like the government, right? Now, I'm not saying that I don't like the government. The government definitely serves a purpose. However, one of the philosophies that I live by, there are no such thing as bad teams. There are only bad leaders, right? So for anyone who's read the book Extreme Ownership by Jocko Willink would have known that, I think that's in chapter 2. Basically, in my view, and even when I think about running this company, right? There's no such thing as a bad team. There's only me, right? It's what I do and what I don't, which causes what my team's results, right? So I personally believe there's no such thing as a bad team. There are only bad leaders. Now, why does that fit with the government? Well, the government are the leaders, right? They're the ones who are making the policy. They're the ones who are making decisions. They're the ones who are, responsible for how the market performs and how the market goes. The reality is right now, the government have not been making great decisions over the last, say, 5 years here since COVID. Now, I want to give you guys some examples of this. Firstly, we've got to consider that there are politicians out there and bureaucrats out there who are making decisions who've got absolutely no idea what they're talking about. Now, Jim Chalmers is a fantastic example who's our current federal treasurer, and he is failing completely when it comes to how he's managing our books. But the point is, he's a bureaucrat. Right, he is not someone who should be having that job. In fact, someone with that job should have an accounting qualification as a bare minimum, let alone having someone who doesn't have qualifications to go and do that job. But unfortunately, guys, the way that our system works, these are the sorts of people who rise to the top, right? The ones who play the game of politics. Now, what this essentially means, we have bureaucrats and politicians today who are making these decisions on policy and housing, who've got no experience when it comes to policy and housing. They've never worked in the building industry. They've never worked in the real estate industry. And yet these are the guys who are making the decisions. It is absolutely insane. In my mind, if that's the way that our system works, the system needs to go on the bin. We need to start again. Right? That's just my overall view of the reason why the government's making such poor decisions. Now, let me give you guys some examples of those decisions. So obviously, when COVID kicked off, it was a health pandemic, and it's something that we haven't really experienced in our lifetime. All right? Now, firstly, the WA state government, we closed our border. Now, I'm not sure of your view about this, whether you think it's a good thing or a bad thing. It was right or wrong. The point is, the border was closed. So what that meant was, our population essentially was very much contained. Now, because we didn't have COVID actually reach WA for a number of years, I think it was until sort of 2022, 2023, COVID actually really started ripping through WA. We were one of the only places on the planet, because we were secure from COVID, that had the ability to increase our mining production. Now, what does that mean? Around the world, right? Places throughout Africa, where they're mining for copper and lithium and all these different minerals. Because obviously COVID was ripping through, a lot of those mine sites had to close down or shut or pause. Because we didn't have COVID here in Australia or in WA for that matter, like our mining production actually ramped up. We were one of the only places in the world where we actually increased the volume because the rest of the world needed it. Most other mine sites around the world had to close down because of COVID. We didn't have to. So what that did by default, by firstly closing the border, is it meant that obviously COVID was isolated in WA. But then by increasing our mining production, and this wasn't the politicians, right? This was obviously mine sites and different private companies and things like that. They increase the demand for the raw mineral. What it basically did here in Perth is it essentially sucked up a lot of our construction workers down here who were working in the metro area for residential builders, and it essentially moved them up north to go and work on the mine and start building out more mine sites and fitting out more capacity on these mines. Now, essentially, we've got a closed border, we've increased mining production, we've sucked up a lot of our skilled workers out of the workforce here in Perth, sent them up north to get higher paying jobs. And then at the same time, the government announced the home builder grants, up to $45,000 to go and build a house. Why? To insulate and keep demand up for the construction industry. What did that actually do? It completely overcooked the construction industry here in Perth. Builders were selling contracts left, right and centre. They were signing up people way above what their indemnity insurances could even handle, in the hopes that they could go and build the houses in 12 months' time when the time was ready. The point is, what happened was 6 months down the track, 12 months down the track from that point, most builders who are using the same trade pools down here in Perth realised, holy shit, we don't have enough workers down here, and trade prices went through the roof and skyrocketed. Builders started having delays. Supply chain issues started to occur. You had multiple builders started collapsing because they didn't have the workers, even though they were selling the contracts. Long story short, it completely imploded the entire construction industry down here in Perth. Now, this is just one insulated example of just the Perth metro area, let alone what was happening around the country. But just in terms of explaining this in a vacuum, this is one really good example of how the government, their great idea was to give people $45,000 to go and build a house. And that decision completely cooked the rest of the market. Today, 2026, we are still feeling the effects of those poor decisions from 5 years ago. So, like I said, guys, the government decisions has been, in my mind, one of the biggest catalysts for the current issue that we're in today. Now, I'm not even going to start talking about interest rates and the other things they've done since then, but that's just an example of where this really started. All right. Now, secondly, the second thing that I find right now is what's caused the current housing crisis is the fact that we have overregulation and we're also overtaxed. Now, what does that mean? The red tape that the government has imposed on both construction and land development has practically caused the market to be fairly unfeasible in many areas. As an example, there are some really big developers out there in the country. One of the big developers is Satterley, all right? So Satterley Estates. Long story short, because of some of the regulation, they're essentially finding it's completely not feasible to be going and building big land developments. So they have got some land developments, but they're doing on the East Coast because they don't have as many regulations as they do, say, here in WA. So again, when we are over-policed when it comes to regulation, all it does is it puts people like myself, who would be, let's say, a land speculator. I want to go speculate on some land and try and develop some land. The reality is that over-regulation is actually destroying my feasibility. So there's less and less developers that actually want to go and develop property. Now, the point is, we're in a period where we need more developers. We need more people chopping up land, and it's just not happening because of over-regulation. Now, from a building and construction perspective, same thing applies. Because of the over-regulation in the building code, the over-allowances we're putting in, the standards, the specs, the energy ratings, all these different things. Like, you got to understand that that's pushing building prices up to a ridiculous point where it's now not really that feasible. One easy example, guys.
If you're overwhelmed by property investing, you're not alone. Most people waste months researching the wrong suburbs, stressing over inspections, and second-guessing every decision. Motivate Property cuts through all of that. We analyse the data, shortlist the strongest opportunities, inspect on your behalf, and negotiate so you don't overpay. The result is simple: a property that actually performs and moves you closer to financial freedom. Learn more at motivateproperty.com.au.
Right now, everyone's running around saying we need more density. We need to fit more people into the same square kilometre here in Perth because we just got way too many people. And yet most builders out there won't touch anything that's two-storey because the amount of extra work that needs to happen in terms of scaffolding, suspended slabs, all these different things, like it's most builders will completely turn away at those types of construction because it's just not feasible for them. Right, the prices they've got to charge are well and truly above what a single story is, and for them, it's just not worth their time. But again, if we're going to do this at scale across hundreds of builders, across thousands of properties across here in Perth, like the reality is, it's the over-regulation of the standards that's actually causing less and less builders to be able to go and do this. So the over-regulation is a huge one, and obviously over-taxation. Now, when I talk about taxation, the main bugbear I've got about taxation is GST. Now, what I mean when I say that, and I know I explained this a couple of weeks ago in a previous show, but let's just say, for example, you think about the life cycle of a building, right? So, firstly, before we even consider building a house, we've got to go through planning and designs, right? So, get an idea of what sort of property we want to go and develop on what block of land. But we've now got to go, speak to a drafty architect, start getting some plans done, at the very front end of the piece. But the point is that drafty architect, surveyor, all the guys on the front end, every single time they give you an invoice, they're invoicing with GST on top. So there's 10% of the money that they're spending is now on top of the value of that, and obviously you as the consumer, the end line person, you're going to be paying for that 10%. By the time it goes from the original guys down into, let's just say, getting through the planning commission, going through a developer approval. By the time the builder's ready to start ordering materials, and let's just say, for example, we've got iron ore, we've got bricks, we've got all these different raw materials. Just the process of ripping those materials out of the ground, getting them produced, getting them delivered, getting them to the site, and then getting obviously the trades to come and pick those materials up and construct the house. Every single time a transaction takes place from step to step, there's 10% in GST on every single clip. So if it takes, for example, a mining company to go and pull out, let's just say, iron ore out of the ground, we've then got to go and get that iron ore, refined and processed. We've got to then send it overseas. Then we've got to deliver it back here as, let's just say, for example, steel beams for a roof. The point is, if that's exchanged, that raw iron ore, if that's changed hands 5 times by the time it gets to site, that's 5 times there's been a 10% GST added on top on every single thing, from the transport to the refining to the production, all the way through to getting to site. Then you've also got the GST of the trades. Right, so every trade who goes on site, 9 times out of 10, they're going to be charging GST. And so, by the time we get to the completed house, the sticker value of what that house is going to cost has had GST over and over and over and over. And that goes into the prices. Right now, one of the low-hanging fruit of what they probably could do is certain parts of that supply chain, they could just remove the GST, and it's going to make houses way more affordable and way more feasible. Now, ironically, our Treasurer today, Jim Chalmers, is now in talks of increasing GST to 15% instead of the current 10%, which is only going to make this even more unaffordable and even worse. So like I said, guys, the second reason why we're in this problem is because of overregulation and overtaxation. All right? Now, number 3. Now, this is more of an anecdotal one, right? This is from our clients and what we're sort of seeing from clients on a day-to-day basis. But right now, guys, there is some very negative sentiment when it comes to housing construction. Now, when I say negative sentiment, think about your view of building a house. Like most people out there that we see don't want to build, right? They want to just buy something established because the house is there and ready to go. We don't have to go through the risk of working with a builder, that build potentially taking 2 to 3 years because of all the delays, and then giving you a price increase of $30,000, and then not getting the rental income while it's being built. Like, there's all these different concerns that people have. Now, again, because of the issues we had during COVID, because most builders ended up cooking their books and didn't have the workforce to essentially supply the houses to the market, we had massive delays, right? So there was examples where houses took 3, 4, in some cases 5, 6 years to build. That is horrendous. Like that is a terrible situation to be in, right? No one wants to take 2 years plus to build a house. Standards here in Australia, in WA in particular, it should be building within 12 months, right? On the East Coast, it's around 6. But the point is, like most people today, because of the propaganda, because of the media, because of the negative press, they purely don't want to build houses. So here is the problem. These people, these would-be investors, the guys who are in this kind of, I don't want to use the word apprehensive because they're not really apprehensive, but when they're viewing the market, they're very much pro-established and very much negative towards construction because of all the negative media. But the problem is, when we think about that seesaw, supply and demand, we physically have to have new construction that is the supply of housing, because the current houses that are in the market are already in the market. They're already reflected on that seesaw. And so the only way we're going to get from this really sharp undersupply of houses, we've got to add new construction into the market. So the reality is, with all the negative press, with all the negative sentiment when it comes to construction, like that is a huge problem when it comes to actually fixing this problem. We need to deal with that. We need the government fundamentally to insulate builders, not cook the builders, which is what they've done. All right. So like I said, lack of confidence in construction, that's reason number 3. Reason number 4. Like I was saying before, guys, there is a fundamental lack of skilled workers here in the country. So when it comes to brickies, sparkies, roof carpenters, plumbers, tilers, you name it, like most trades right now, we don't have enough of. Now, I know there are other industries, for example, teachers, we don't have enough of. Nurses, we don't have enough of. Like there are obviously other industries that are very much in critical demand, but right now, we physically don't have enough skilled trades. Now, what does that do to the market? Supply and demand, right? So again, we saw this during COVID. There was a huge uptake in new construction when those home builder grants got announced. But there's only X amount of X amount of brickies in Perth. So brickies went from about $1.50 per brick to lay to like $2.80 within the space of like 2 or 3 months. And so again, if you've got, for example, if you've got a bricklaying company and you go and work for various different builders out there, all of a sudden, there's all of these extra other builders that are coming to you and saying, hey man, we really need these houses built. I know you've already got heaps of jobs on, but we'll pay you more. Like, of course they're going to go to the higher paying jobs. Why the hell wouldn't they? This is a free market. It's called supply and demand. So when we have an undersupply of skilled workers, obviously the demand for them increases and skyrockets, and their prices also reflect to that. Now, again, if you've got, let's just say, for example, 5 brickies in Perth, and you've got 20 builders who want a brickie, you can essentially charge whatever you want. If you've got 5 brickies in Perth, and you've got 5 builders in Perth, that's 1 brickie per builder, you can see that there's going to be a fairly even market, right? So once again, the fact of the matter is we've got not enough skilled workers here in the country. Now, when it comes to the current, let's just say, immigration policy, one of the things that I have been saying for quite some time.
Whether you're buying your first home or third or fourth investment property, Motivate Finance Team has you covered, finding the best lender to fit your needs. And here's the truth. If you haven't reviewed your lending in the last 12 months, you're probably overpaying. Banks reward new customers, not loyal ones. We review your structure, compare lenders, and build a finance strategy that actually supports your long-term goals. Whether you're refinancing, upgrading, or building your portfolio, your lending setup matters more than you think. Visit motivateproperty.com.au/finance to get started.
We should only be bringing in skilled workers into the country. Like, we literally need more brickies, more plumbers, more carpenters, like all of these skilled trades. Like, this is who we should be focused on in terms of importing to the country, not just anyone, which it seems like the government sort of understood that recently and started making those sort of changes. But this is shit that they should have been paying attention to 5 years ago, not now. It's kind of too late now, right? And we sort of needed them years and years ago. But yeah, like I said, like a skilled trades, not enough of them is obviously pushing up prices. Number 5, supply chain issues. Now, when it comes to, for example, bricks themselves, timber, comes to steel, there are quite a few different supply chains that have been messed up since COVID. And then obviously when it comes to the Ukraine war, now the Iran war, the reality is a lot of these supply chains and supply chain routes are now out of whack. All that does is push up prices at the very end of it, like at the end of that chain, all right? So the person who is having the product delivered to, they are going to wear the delays and the cost, right? Right now in this market, it's the purchaser of the property. It's the one who's going to be building the house. So at the end of the day, when these disruptions happen, because you've got to remember, a builder is quoting based on their current supply chain. If that supply chain changes and all of a sudden it's going to cost the builder an extra $20,000 to get that timber onto site, like, you're going to end up paying that price because they have to pass that on. Otherwise, they're going to go under and you're not going to get a house at all. And it's only going to make all this stuff worse and cascade even worse, right? So the supply chain issues, particularly around war, that has been making a mess of things, well and truly. The final problem that I can see with the current housing issue is bank policy. All right, and fundamentally, it's the bank itself chokeholding the supply of housing. For example, right now we've got a 3% servicing buffer on all loans. So what that means is you, as a buyer, if you want to go and purchase a property and get a loan from the bank, let's say that your interest rate is 6% and it's going to cost you, $30,000 in interest. They're assessing you at a 9% interest rate. Why? Because of the GFC. All right, so because of the last recessionary crash in 2008 to 2007, 2009, the bank has corrected by adding that 3% buffer on to make sure that you can essentially afford this mortgage with a 3% interest rate rise. The problem is, though, by having that 3% on the buffer, it essentially limits the amount of people that can go and purchase property. You can't borrow as much because you're not being assessed at 6, you're being assessed at 9. By you not being able to borrow as much means there are less and less houses supplied to the market, right? So again, if we think about the banks as being the gatekeeper of the funds, as the banks get tighter, less and less houses get built, plain and simple. Now, not to also consider the fact that the interest rates have also been rising the last few months and will continue to rise this year, all that's going to do is make it even more unaffordable, right? So right now, if interest rates are 6% from the bank, if by the end of the year they're selling the money at, say, a 7% interest rate, they're going to be assessing you with a 3% buffer at 10%. So the reality is the amount of people that can afford a mortgage at 10% interest rates, particularly considering the average home is almost punching $1 million, it is less and less people that can actually afford to go and do that, right? So again, the bank policy, rising interest rates, the way that they're lending with those servicing buffers, that's essentially chokeholding the supply of houses. Right now, what we need to do is we need to relax policy and just get more and more people to go and build these houses for us. And by the people building these houses, supply and demand, it makes the housing market less hot and a bit more correct. So like I said, guys, those are the main reasons, the main 6 reasons in my view as to why we're in such a problem at the moment. Now, having said that, when it comes to the current numbers, so Australia is almost approaching a population of 30 million people, right? Which obviously will be a new record once we hit that point. Today, we are around 400,000 houses short just in the current market, right? That's nationwide. So we think about the seesaw. The seesaw right now is negative 400,000 homes. Now, in terms of the numbers for last year, right now we're building around 85,000 to 90,000 homes per year, right? So, again, these figures are sort of on par with what we've really done in the past. However, the problem when it comes to demand is net population growth. We have imported, and essentially 2/3 of it's basically immigration, but we're bringing in, and our population is growing over 400,000 people a year. So in one hand for demand, we're growing by 400,000, and yet we're only building 85,000 homes to meet that 400,000. The average household today has 2.8 people. So as you can see straight from those raw numbers, like we are simply not building enough houses to supply the current market with the demand. Now, there's 2 things we can do. We can either try and increase the supply of houses, like what I've been mentioning, or what we can do is we can slow down immigration. Now, I'm not saying here that we shouldn't have immigration. I'm an immigrant. I think it's absolutely fine and reasonable to be immigrating people at the right pace. But in my view right now, we are importing way too many people for the amount of houses. Like we're bringing in more people that we can actually build infrastructure for. That is not a good sign. And that's not a good thing that we want to be doing long term, because at the end of the day, all it ends up doing is making houses more affordable. Then people like me who've got multiple houses, I'm getting wealthier while the average person is just getting pushed onto the street. That is not a good thing for society, guys. That is not the direction we want to be going long term. Now, in terms of construction, right? So one of the concerns that people are sort of having at the moment is the fact that construction does seem to be not really increasing at the rate we need to increase. Now, the one way that I would probably respond to this concern is again coming back to the bank's policy. Now, if for example construction numbers have been getting worse and worse as over the last couple of months in particular, I would be very interested to see how that correlates to bank policy, in particular interest rates. Like I said, guys, this month we increased interest rates. It was last month. So last month we increased interest rates. What that does is it increases the bar for finance and makes it harder to get finance. Like, you got to understand, if the interest rates rise again, let's just say next month and the month after and the month after that, let's just say there's 3 consecutive rate rises in a row. Like, what you're probably going to find is the construction numbers are pretty much going to correlate in the exact same pattern. Like, there's going to be less and then less and then less people supplying the new houses to the market. Why? Because money's too expensive. So we are sitting in a world right now where technically in Perth in particular, we need to be decreasing interest rates, whereas in, say, for example, New South Wales or Sydney, we need to be increasing interest rates to slow that market down and lower ours to speed our market up. So that's just, I guess, sort of one example. But at the end of the day, guys, like the bank, they're the gatekeepers. They're the ones with the money. They're the ones who are bankrolling everything. If we physically do not have enough fund, if we don't have enough people who can go and afford to do this, like that fundamentally is the supply of housing. Now, could the government come in and just build all these houses? Well, they've tried. They can't. I mean, right now there is a current, with the I've got the scheme, but basically the government said back in, I think it was 2024, that they're going to go build 1 million houses, or 1.2 million houses by 2030. We're only, 2 years in. We're already over 100,000 houses behind the market. So the fact of the matter is, the government doesn't have the funding nor the manpower to be able to go and build these houses for us. We needed private investors. So that's essentially people like you and me going and risking our money to go and buy an investment property, put tenants into it, house a tenant. The only reason why we're making so much money is because there's not enough people doing it and there's a huge demand for it. So what we're doing is we're investing in what society actually needs. Society needs professional property investors like us. They need the private investors to essentially take the risk, fund the houses being built, renting those houses out to essentially alleviate the rental market supply issues, But fundamentally, the government can't do this. They need us to do this.
If your investment property is being managed, but you're still dealing with stress, vacancies, or tenants who don't respect the home, you don't have a property manager. You have a problem. Motivate Realty runs property management the way it should be done. Clear communication, strict tenant screening, proactive maintenance, and complete transparency so your property stays protected and your rental income stays consistent. If you want a property manager who actually treats your investment like a business, visit motivateproperty.com.au/realty.
I mean, last time I looked at this, it was something like 70% of all the investment properties out there were owned by private investors. So the government and big corporations, like they're not going to be the ones that are going to save the problem here. It's going to be people like you and me, right? So again, if we do anything that's going to disincentivize property investment right now, we are shooting ourselves in the foot. So these conversations of capital gains tax concessions changing and negative gearing changing, like it's all well and good on face value. And like I said, this is all, it sounds great from a politician's perspective, but you've also got no clue about what you're talking about if you think that's a good idea right now, considering we're in such a shortfall supply of houses. So again, another example of the government making a very poor decision and not actually going to benefit the market, because all it's going to do is continue to disincentivize, continue to limit the amount of people who want to go invest in property. House prices are still going to continue rocketing. All right. Now, when it comes to planning regulations, this is probably a bit more of a detailed explanation when it comes to this. So, guys, when it comes to the government, like I do believe that we need to have a very robust conversation about what is the purpose of the government. This is something that I personally I think about often, right? And I do think about this from the view of like, what is the purpose of the government, right? Fundamentally, the government is supposed to be, in terms of a democracy, is for the people, of the people, and by the people. It's supposed to be public service, them serving us as the people. Unfortunately, not really in the world we're living in. In fact, it almost appears and feels as if the current government structure and the way that it's being run, it kind of feels like they're the ones with all the power and we essentially work for them, right? So the dynamic is kind of not really designed in the way it's supposed to be. However, in my view, I don't believe the government should be trying to solve our problems. I believe we should let the free market solve our problems. If, for example, there's something that we really, really need, there can be incentives put in place so that the market goes and provides that to itself, rather than the taxpayer trying to bankroll the government to go and fix that problem for us. Housing is a great example of this, right? In my view, the government's role should be to regulate, not to fulfill. Now, what does that mean? I believe the government should be the ones making sure that operators are doing the right thing, builders are doing the right thing, developers are doing the right thing. But the problem is, with over-regulation, you're going to end up finding less and less people want to actually be those businesses. Now, we've got to keep in mind, guys, and I'll talk about from like a construction perspective. Like when it comes to a build, there are three components. There's the materials, there's the trades, and then there's the profit. The problem is, any time regulation increases, it generally increases the cost of the trade or the material. So right now, one of the changes that's happened recently are the 7-star energy ratings, right? Happened about 18 months ago. Now, by having an increase in the standards, it means that the actual cost of the building is now more expensive because the builder's got to spend more money on getting to a high specification. Now, by increasing the regulation on a building, it essentially increases the cost on the building. Now, again, the builder's not just going to wear that. The builder's going to pass that on to you as the consumer. So at the end of the day, when it comes to over-regulation, if we do over-regulate, it means that houses cost more and more money, and there's less and less people who want to be the builder to go and complete that house. Why? Because their margin starts to shrink. Now, why does their margin start to shrink? Well, it shrinks because when you've got, let's just say, for example, and you also got to keep in mind, guys, like builders generally make a percentage. So most builders charge around that kind of 20 to 25% margin on the cost of the materials and on the cost of the trades. Now, the point is, when they sign a fixed price contract, if the cost of the materials or the cost of the trades changes, the builder's got to wear that out of their margin. So the point is, if there are too many big swings in the material market or the trade market, the builder's going to do one of two things. They're going to say, hey, we've got to either pass on the price because it's just outside of the scope here and it's going to send us under, or instead of going under, they just cancel the contract and they say, we're not going to build this house anymore. We can't because we're just going to go under. Now, again, guys, notice how we're talking about overregulation, and now we're talking about the end result being builders don't want to do this. It is correlated. What this means, if less and less builders want to get into the market because their margins are getting screwed over by overregulation, you've also got to consider that's supply and demand. If there are less builders in Perth that want to build houses, we've still got a huge amount of demand, their prices will increase. Again, right now, if we want to help fix this market, we need more builders, not less builders. All right, we need more trades, not less trades. We fundamentally need more supply of the raw materials, all the trades, all the guys on the front end to actually help fulfill on increasing the supply of housing and actually fix this market. None of this is going to work if we're continuing to disincentivize people like facilitating the supply of housing. Private investors, builders, developers, funders, banks, we can't disincentivize these guys right now. Any disincentive is going to mean there's less of them wanting to do it. With less of them wanting to do it, prices are going to continue rising. It's just as simple as that, guys, right? And the fact that I'm not a politician and I know this, and politicians who are making these decisions aren't aware of this shit is absolutely effing insane, but this is the world we're in. Now, the government has announced, this is going back a few years ago from I think it was the 2023 or 2024 budget, that they want to build 1.2 million homes. Like I said, guys, they're already, I think last time I checked, it was about 160,000 houses short already, 2 years in. There is absolutely no way that the government's housing construction target is realistic. There's just zero way it's going to happen. The only way it's going to happen is by incentivizing the private investor like you and me. Now, in summary, what does this mean for you guys? Right? Well, firstly, not a whole lot, because the market's going to do what the market's going to do. In fact, I'm pretty confident that nothing's really going to change with this until we see some of the leading indicators change. Now, when I say leading indicators, you've got to consider this in two worlds. There's the leading indicator, and then you've got the lagging indicator. The leading indicator is the government pausing immigration, or the government, bringing in 100,000, skilled trades into WA, or let's say, for example, the interest rates, get driven artificially lower so that more and more people can afford to buy houses. When the leading indicators change, the lagging indicator is the price mover in the market. But that's not going to happen for around 12 to 18 months. So even if we could wave a magic wand today and pause immigration, insulate the construction market, provide, let's just say, tax concessions to materials, remove GST from construction contracts, let's just say we started doing all these different things. The point is the market's not going to feel this for around 18 months. Now, the fact of the matter is, guys, we haven't changed those leading indicators. So right now, as far as we can tell, for the next, say, 18 months, nothing's going to change here. Now, what does this mean for you? You got to remember, guys, if you want to be able to make money by investing, you want to know where to put your money into the future. For example, let's say you said to me, hey, Corey, I want to become a millionaire and I want to do it in shares. Well, you've probably missed the boat on Apple and Amazon. You probably want to buy those shares 30 years ago. Why? You would have been able to pick the future blue chip. You would have been able to pick the future. Now, if you can pick the future and predict the future, that is probably one of the best ways of making millions, if not billions of dollars. So the reality is, guys, I can almost tell you what the projection of the next 18 months is going to be, because right now, the leading indicators of this housing crisis, they're not changing. They haven't changed, right? Even right now, with all this build to rent and these big developers trying to pull up all these big apartments, like that's not going to do anything, right? So the fact of the matter is, the market is in a current trajectory. Unless the leading indicators change, that trajectory is not going to slow down or stop anytime soon. That should give you confidence that the market is still going to continue booming. Now, what does it actually look like in reality? Well, right now, the Perth median house price is around 850 to 900 grand. I would say by the end of the year, it's going to be over $1 million. I would say by the end of next year, it's going to be around 1.1 to 1.2 million. If the leading indicators don't change, that is only going to continue. Now, like I said, I don't think it's a good thing if it continues, because the bigger the boom, the bigger the crash. And we might get to a point in 2028, 2029, 2030. The housing market in Perth hits around that kind of $1.3, $1.4 million median, and then the market goes through a full correction. But remember, when it goes through a correction, it's not going to come back to today's prices. It'll go from around that kind of 1.2 to 1.3, and it'll probably balance out around that kind of 1.1 to 1.2. And then it'll probably plateau for a few years before the market starts to reset, and then the market resets in around 15 years' time. It starts booming again, right? That's just the Perth pattern. And so to give you guys, I guess, sort of a thought or a final insight, if the leading indicators aren't changing, it should give you a bit more certainty and confidence that the market's going to continue booming until those leading indicators change. Now, if, for example, we let's just say, I play devil's advocate. Let's say, for example, next election, federal election, one nation get into power. Now, if one nation, now when I say get into power, let's just say that they, win the election and, there's a big shuffle around with Parliament. Obviously, one nation can't be in power, but let's just say, for example, that they do have control. The reality is, I would imagine they're going to be pretty aggressive when it comes to reducing immigration. So even if one nation do get into power, or let's just say they get into control, to assume that they're going to pause immigration, I don't believe. I think that they'll drastically reduce immigration. But even from that date, it's still going to take a good 12 to 18 months before the market actually feels the impact of that. So like I said, guys, whether that happens or not, that's for a crystal ball, and the voting booth for that matter. But having said that, because that's where the market currently is and the leading indicators aren't changing, like I said, guys, it should give you a bit of confidence about where the market's going so you can take advantage. So I hope that helps, guys. Any questions, any concerns, please leave them in the comments. Thank you for listening, guys, and I hope that helps.